here we are. We're taking a look at Apple Computer on a daily chart, and this line is a 100-day rising moving average. Over the last several days, from day 1 to day 2, with big selling below all the key daily moving averages, day 3, day 4, we marked it down to where that gap sequence had occurred, and this gap sequence occurred back on 10/7 of 2011. That was the low end of that bar, and people came in and they want to own it. The upside resistance will remain right about there. So the distance between that's going to be right around, let's just call it, I'm not looking in our application, but you can hold me pat to it, that's going to be 290.45 cents, okay, from the current area up here. The thing that MMTs would want to be understanding about how something was marked down, the $400 December call up here on this date right here on 10/18, and today's date's 11/15. That's just a month ago, buddy. They're on sale down here. Yeah, the high is 740 and the low is 580 and they're 615. Yesterday's high was 8.25. My point of it is that with the equity on this daily chart trying to take out that 100-day simple moving average, that's going to put a bottom here. Remember, it's the amount of risk that you take out to the dollar cost entry down here. If you were buying them up here and you had a great move and then you held them down, look what happened. The contracts are at their all-time low. And then intraday, we do have the daily chart above the 100-day moving average. And that 100-day moving average is going to be the key support level of 383.64. That's what you want. Plus, that 100-day moving average was rising. And this is all public stuff. The name, still remember that you still have a 3-day daily sell signal that took that big day down right here to that bottom. And this math is minus 2.55 right now. And that has to go lower, even though that Apple has put in this support level here. It still remains under the quicksand because it has this daily sell signal on it. What we would be looking for is a rising consolidation above the 100-day simple moving average as we move forward. It's the first day at the very first bottom support level that we've had a fairly decent entry. As far as the daily percent DS, which is down here, it made a low of 18.84 and is certainly right now going in the right direction in this bar right here. This bar is right there. So this bar down here at 20.62, it's going in the right direction mathematically. Now, that's all standard public analysis, but that's what has to happen because that brings the bear that was short Apple. Now, here's the Apple chart, or level 2. You have 371 highs right here. So let's make sure that you can see what the daily bar looks like above that 100-day moving average. But you need to know that there's going to be certain wall of resistances on the way up. Here will be another one that it will have to challenge. It'll be right there. And that's going to be at 388.95 or so, right below 389. So that's going to be your first one. That's going to be your second resistance. And then ultimately right up here where the top of this low end of this bar was right here, and that number is not all that bad of a number. Let's take a look and see here. Let's blow this up a little bit. There we go. There's the bottom of the support level. Now we can clearly see here where that's going to be resistance 1. This is going to be resistance number 2, and that's going to be resistance 3 and 4 right up at the highs there. So the current one that you're going to be watching is the one that it's hitting right here. And when it breaks through resistance levels, it must break through with a vengeance. The move. Here we go. This level here is the first bottom-up process on a daily bar. This area right across here is 386.5. And right now, we're printing where the shorts are having to buy to cover. You got 371 highs. You haven't had that in this name for a long time. And that's also another confirmation down here. That's the other reason why our primary decision was to start scaling in on this beaten down 400 December call right here. These were the highs. So I still have a lot of risk, but I've taken a whole lot of risk out of this entry by buying down here. I didn't buy it here at $16 and $17 and take it down $10. No, I'm buying first pass daily breakout right here. This is what it looks like. This is what it looks like right here. That's that 100-day moving average. The shorts are covering as they come out right now above that 100-day. And when the shorts come out above a key moving average, you want to see that kind of movement on a daily level. But just remember, it still has this daily sell MACD bar, and it will have to stop going down, and it too will have to go up this way to confirm. And you want to consolidate above that 100-day moving average. Why is it bullish? Because it was rising. Yeah, it undercut it, but it has to close above it. And as long as it closes above it, this is the first beginning phase of this turn off of this double bottom price action right here. Okay? There's a 4-day breakout. And we're testing that bottom. And that's on Apple Computer. And we're buying down here on the call chart. Here it is. Let us not be confused. It's a December $400 call. And it's cheap. And I'm buying wholesale. I won't be denied of that.